All right, I think we can get started here and we'll let folks kind of trickle in. So welcome again. I'm Sherry Totoki, General Manager and Director of Community and Content at Climate Capital. And today I'm excited to welcome Joel Armin Hoyland, Founder and CEO of Climate Finance Solutions. Joel has helped companies win over $1.6 billion in government grants, and we'll be sharing more about that today, especially as it relates to funding for first-of-a-kind projects. So we'll start with a short presentation by Joel. He'll give a brief overview of kind of the landscape, especially in today's climate. I'll kick us off with a few questions, and then we'll open it up for a Q&A from the audience. So feel free to drop in your questions in the chat along the way. You can come off of mute, and we can get into some conversation after the initial presentation. And so with that, I will hand it over to Joel. So Joel, thanks so much for joining us today.
Thanks. Yeah, really excited to be here. Excited for the conversation. As Sherry mentioned, I'm Joel Armin Hoyland. I'm the founder and CEO of Climate Finance Solutions. CFS specializes in large-scale, non-dilutive public funding. That mouthful means large-scale opportunities in not just the millions, but the tens and even hundreds of millions. We're primarily with grants, but also tax credits and other incentives and loans and loan guarantees, and then public funding from the government. Providing really wraparound services within the context of non-dilutive funding and working globally within the US, Europe, and elsewhere, but a really big footprint in Europe. And as Sherry mentioned, we've secured over 1.6 billion. About, I guess relevant to this conversation, about 750 million of that was FOAK funding. And as we know, this kind of non-dilutive funding from government is really a critical element of the capital stack for FOAK and just climate tech in general. And so in terms of this presentation, just a few slides I'm going to share. I think some of you probably follow the news. There's been a lot of volatility and change in the space. So just going to go through a quick primer on kind of like what's going on right now and what we can expect, I guess, in the near to medium term. So to kind of compare what we're doing, what we're seeing now to what it's been in the past few years. Historically, and this increased slowly over time, about $28 billion per year was allocated just through the normal appropriations process to climate. The three really big climate bills, the IRA, IIJA, also known as Bipartisan Infrastructure Law, and the CHIPS and Science Act, added another about 500 billion on top of that, and took the annual spending on the federal level to about $110 billion per year. And that was not just more money overall, but we were seeing more money for later stage projects really throughout the entire life cycle of companies. So later stage demonstration, FOAK projects. And then one of the reasons that grants in the tens and hundreds of millions of dollars were becoming commonplace was really in large part funding for all of these first-of-a-kind projects that we were seeing. And this funding was pretty significant under the last administration. So they got about $10 billion out the door in grants from OSED. Some of those are remaining to be seen. Some of those have been canceled. But either way, it was really transformational for the sector overall, and certainly for FOAK in the United States. And the FOAK grants were, OSED, the Office of Clean Energy Demonstrations, was certainly kind of the poster child for that, but not the only department or office as well. There were other departments involved. For example, we won a couple of the USDA fertilizer production enhancement program, where there were grants in the multi-tens of millions of dollars there. And then also with the DOE Loan Programs Office, 43 billion out the door, mostly in conditional commitments. And that also was really transformational for FOAK in the US to have those kinds of loans going to climate related and clean energy projects. Depending on how you want to define first of a kind, the states, this could be definitely plus or minus 100 million over the last few years, but states, again, I guess we're just in general following the larger trend of more more money for demonstration projects and larger grants and funding for demonstration and first of a kind projects. Plus, this doesn't even show the billions of dollars in federal and state tax credits that were going to large scale demonstrations, commercial plants, and FOAK. Obviously, the new federal administration is making pretty rapid and profound changes. It's only been 4 months. This feels 5 months. It feels like a much longer than that. They are actively dismantling OSED, so they're down to a skeleton crew of about 70 people. It's essentially just winding things down. That's down from about 270 at the end of 2024. And what they're doing right now is terminating about 50% of the grants and then removing the remaining grants to the other offices. So some of you probably saw a big announcement about this just the other day where they're canceling a bunch of grants. Unfortunately, about 150 million of that was grants with our clients. But there is a bit of like a glass half full, glass half empty situation. If they're terminating 50% of grants, it means 50% of them are staying, and certainly they could have just taken that down to zero. So interesting to see how that goes, how that moving forward, but certainly not great news. It looks like the Loan Programs Office will maintain its lending authority, but they're not going to strip that as was kind of envisioned in Project 2025, but it is certainly going to shift to a much more narrow range of technologies that fit with the administration's priorities, or maybe you see some pet projects going through. We saw some money move in March for a nuclear plant that was based on a senator kind of pushing for it. And then you'll see from this table here, this is the tax credits in the House passed version of the reconciliation bill that's going through Congress right now. You'll see most of these are call for gradually or rapidly eliminating most of the tax credits that are relevant to climate and FOAK. The gradual elimination actually goes to 2032, so there's certainly the opportunity to reverse some of that. And the Senate has not, this is just the House, so it's going to be in the most extreme form. The Senate hasn't had its say, and it will be, softened somewhat. I know there's a lot of pressure to at the very least move the technology neutral PTC and ITC, that's the production tax credit and investment tax credit, into the more gradual phase out, and potentially clean hydrogen as well. TBD on manufacturing and other FOAK relevant ones, but either way is certainly trending in the wrong direction. And then I think you can also see just by the way they're treating the different tax credits, and this really holds true across what they've been doing with grants and other funding elements as well, that the impact is really varying pretty significantly by sector and technology. So I think potentially I buried the lead on this in this presentation or these slides, but I think the most important point is there is still government funding for FOAK. There's still government funding for climate. There will still be grant funding, including for some FOAK at the federal level. It's just going to be a more limited number of sectors, right? So this first secretarial order from Chris Wright, the new Secretary of Energy, laid out the priorities very explicitly: nuclear, geothermal, hydro, grid, critical minerals. We just actually submitted a very, very large grant around nuclear that was it was a rehash of an old Biden era program, but they did open it for small modular reactors for nuclear. So we'll see what they do going forward, but the money for these things is still appropriated. So what they're really just kind of shifting it around. They have said that the funding that they do put out is going to be more biased toward R&D than FOAK. So unlikely to see as many grants in the hundreds of millions here, unfortunately, but there will still be grant funding for climate, and most likely grant funding available that are outside of these sectors as well. This is just, these sectors are expected to receive the lion's share. And then on the state side, I mean, obviously the states don't have as much money as on the federal level, but they will still continue putting grant money into R&D and pilots and demonstrations and even first of a kind. There are some pretty significant state level incentive programs. And then green banks like the California Investment Bank and other green banks, have alignment and it can provide funding for first of a kind as well. But certainly, I think not just for FOAK, but also for climate and climate funding in general. Like the big kahuna now is definitely Europe. I think we at CFS have been fortunate to have been an international company since our inception, so it has not been difficult at all necessarily for us to kind of make that shift, and we actually started doing that early in 2024. But companies in the U.S. that we're really seeing are starting to think about, what does it mean to move to Europe, or if we are planning to do work in Europe, what does it mean to accelerate that timetable? And frankly, for companies that need significant government funding for their large first of a kind project, if it's in the high tens or hundreds of millions, the only place you're really going to be getting that funding from government in the next few years at least is in Europe. And that will include the EU Innovation Fund. This is a $38 billion fund specifically for first of a kind commercial demonstrations. They have some like manufacturing in there, but it's primarily for FOAK. A 3.4 billion call just closed. That was the one for technically 2024. There, we expect another one late this year, and then it will be released annually. So that is significant funding for first of a kind. Projects can be you can get over 100 million euros in funding there. They also just closed in February they just passed the Clean Industrial Deal on the European Commission level, which is over 100 billion. So that they're opening a 100 billion euro industrial decarbonization bank, and this is basically going to be the LPO of Europe at this point. So they have 100 billion to provide loans or loan guarantees to near commercial or commercializing technologies. And they also add another 600 million in grants under the Horizon Europe, specifically for near commercial FOAK deployment. And there is currently an open call, well, a bunch of different grants under the Horizon Europe program and the EU Life program that totals about 1.8 billion. And it's not specifically for FOAK. There's also R&D, mostly R&D funding in there, but there is funding in there, some pretty significant funding that's in the tens of millions for pilots and even demonstrations. And then there are other programs that will be released that have FOAK project funding in the tens of millions as well. And I should point out, especially for this audience, that the funding, this funding is not only available to European entities. Certainly you'll need a European partners, but in particular, the Innovation Fund, any country in the world companies can be the lead applicant. So we just completed a project for an American company as the lead applicant with applying for over 100 million euro. I always almost say dollar, 100 million euro grant. And the rules certainly vary for the other programs. Certainly in many cases, you'll need EU entities as leaders. Leads are strong partners, but US companies and other foreign companies can participate. Certainly I got accused at SF Climate Week a couple of times for sounding too optimistic. So I don't want to sound too optimistic. Certainly, FOAK and climate funding in the US has experienced a set of very massive own goals. And it's not great for the climate sector at large either. But I think that obviously we have to keep moving forward. And there certainly is a path, even if it's more narrow.
Thanks, Joel. Um, Great. Thanks for giving that overview. It's really interesting to hear you talk about, the US market versus market in Europe and other places. So, we have some kind of early stage investors on the call. how should investors think about supporting the companies that they've invested in at this point when they're going out for potential folk, fundraising in the next year or two, just given the landscape right now?
Yeah, I think there are a lot of things that investors can do to encourage their companies and support their companies. I mean, obviously, providing follow-on funding is always helpful. There's a lot of companies that are going to be going back out to fundraise. I think that also just encouraging companies to look at alternative sources of finance is really important. Not all investors do that. And even if you are not equipped to kind of provide material support to the companies, whether that is advising or or funding, just encouraging them to look at alternative sources of finance for their company, for their project, encouraging them not to just totally give up on grants. I think that's another thing that I've been hearing a lot. Just because there are fewer grants available from the federal government, it's like, no, grants are dead. Like, that's not a part of the capital stack for climate tech companies anymore. That's definitely not the case. There's still a lot of grant funding out there. You just have to be a little bit more smart and a little bit more creative about securing that. So I think a lot of it is just around encouragement to continue to consider these other elements of the capital stack. And then obviously providing material support is helpful, whether that is connections to, frankly, consultants like us that can help, connections to, if the companies are doing projects, connections to folks that can be project partners, whether that is if they are, if a company is writing a grant, providing a conditional commitment letter. It can be really helpful to help them get that match funding for specific grants. So I think there are a lot of things that investors can do. I think it starts with encouraging companies to continue to explore the entire capital stack, and then kind of following on with a lot of very specific material actions that you can take to support them in doing that.
Great, thank you. And for folks in the audience, feel free to drop questions in the chat and we can get to those in a bit as well. Great. So, also for folks that are kind of, investing at the early stages, the folk financing, all those pieces come, later on down the road. So for the folks on the call, what are those specific signals that they should be looking for at those earlier stages to assess whether a company is likely to secure some of that, government grants down the line, particularly around the first of a kind deployment?
Yeah. So I mean, looking at folk in particular, I mean, it's fundamentally about the relevance of the technology, right? So you're going to want to see, a platform or infrastructure type of technology as the potential to impact system level decarbonization, whether that's around like decarbonizing industrial processes, grid infrastructure, some sort of clean fuel that can be widely utilized, materials that can be widely utilized, and then achieve scale to justify those large scale first of a kind plants. And then I think even at the point that maybe some of these investors are investing, maybe seed or even pre-seed, the company should be able to articulate a clear use case for folk, right? And even if they don't have like an anchor partner in mind, they should at least have like an archetype for that. And then you're going to want to see, to have some confidence on the folk side, some of that technical risk retired already. So you're going to want to have the company at like a TRL or technology readiness level, 3 to 6, and maybe even more important, have a really defined path to that TRL 7 to 9. Even if there are some unknowns, you want to have that clear trajectory at least towards the integrated pilot or demonstration system. And I think certainly it can be a little thrown off in this environment, at least in the federal level, but there should still be, a level of alignment with public policy priorities or funding priorities, just to give some certainty that there is going to be public funding, at least if that's going to be critical for these first of a kind plants, or even just grants in general for the company. I think in climate's still going to be an important public policy priority in states and internationally and pretty much at every level other than other than the federal government. Um, I think as always, right, assessing the team is critical with these sorts of investment decisions, particularly with folk because public funding is such an important piece of being successful there. And just in this environment as well, you're going to want to see founders who understand understand public capital and have an integrated fundraising strategy, even if even if they don't know, they can't rattle off every single public funding source that they could apply to. They need to be able to articulate how grants fit into their capital stack, right? And not just equity. And if they don't know themselves, like, have they already or are they committed to hiring consultants or team members that have that right expertise and not just kind of hand waving and doing it in an ad hoc manner? And then, of course, beyond just public funding with folk, there's an even greater understanding of it, like, and commitment to blended finance models, right? So, a lot of the projects we're working on are like our grants and loans and tax credits and offtake in addition to equity. Um, and I think for both grants and folk people that are looking at doing first of a kind, um, you're going to need large scale consortia and partnerships to be successful. So are these companies, early on understanding these elements and engaging with advisors and developing key partnerships like financing partners and research institutions and EPCs and potential anchor off-takers or even site hosts, because sometimes these projects, these grant projects, that getting the site host to agree and develop that plan can take months, if not years. Do they have any access to grants experts to either have on their team or to hire externally? And then there needs to be like a pretty significant level of strategic planning as well, right? Because there is a, a pretty significant lag time, especially with non-dilutive funding and particularly with grants, between the time you apply for the grant and the time that you receive the funding. And obviously, you also need to, it's not like equity. I mean, you define uses of equity, but with grants, it's very, very specifically prescribed projects, and there's a long project periods, right? 3, 5, sometimes even 7 years. So you're really going to need a funding pipeline or an ecosystem map that shows all of the relevant funding that's available that lines up with their technology and commercialization roadmaps. That's if you want to. That is the founders that are going to be the most successful are going to have that level of planning, and that's what we help founders do, and that's what some founders can do themselves as well.
That's quite a bit, especially for companies at the early stages. Uh, are you helping companies kind of at those early stages? I guess my follow-up question to that is, how can companies, when they might not have a lot of that, funding or resources kind of early on, how can they resource, using what they have to build out all of those pieces?
Yeah, and I think I'm not necessarily saying they have to have all of that developed, but you're going to want to see that they have a perspective on it. You're going to want to see that they have in their funding plan for the next few years, they understand the different types of capital that they're going to need to be securing. They're going to need to understand the people that they're going to have to work with for these projects. Not that they necessarily need to have those projects already, or those partnerships already, or that they need to have all of the consultants for all of those different types of capital lined up already, but they at least need to understand that those things are going to be necessary. And they don't necessarily need to have like a funding roadmap or a funding pipeline for the the 100 million, 150, $500 million FOAK projects that they're going to be working on, but they should have a perspective on like, what does the funding ecosystem look like for my company now in a few years time, so that they can effectively, if they are applying for grants, and they should be applying for grants kind of throughout the company life cycle, you have to effectively future proof the project design. So it's both about selecting the right grant funding opportunity that is going to help you down the your technology roadmap and your commercialization roadmap, but it's also about designing the actual project that's again like 3 or 5 years that is going to actually get you to where you need to be. So they need to have a perspective on it, even if it is a lot, but they should have a perspective on those things, even if they're not like fully prepared to like apply for $100 million grant today.
Yeah, that makes sense. Uh, how do you think about the stack for folk tech that's underinvested? So you had, the slide that showed really the ones that are going to get the lion's share of funding, but there are other technologies, right, that are important to the climate and the energy transition and all of the other pieces. So would love to hear, how you're advising companies that are outside of those means.
Yeah, I mean, this is where non-dilutive funding becomes even more important, right? If you're in an underinvested space, where are you going to be getting that funding, right? And if you do have alignment with public policy priorities and potentially funding priorities, non-dilutive grant capital can really be essential, right? And this funding is available really at every, as I mentioned, kind of at every stage of a company. So everything, everywhere from like the spin out of the company potentially to applied R&D to early pilots to demonstration all the way up to FOAK. So kind of having that perspective on the full capital stack and understanding that there is non-dilutive public funding that is available at those different stages. I think that this is not super common, but it is becoming more common to have these mission-driven blended finance sources kind of showing up earlier in companies' life cycles as well, right? So that could be like program-related investments from foundations or if they're international development finance institutions. Looking at breakthrough energy fellows, for example, or prime coalition. So this called catalytic capital for a reason, right? So alongside grants, and some of these do provide pretty significant amounts of funding. Breakthrough Energy Fellows provides 2 million, I believe. So in certain, in some of these, especially foundation funding, if you're going to be getting catalytic capital, you have to be very intentional about who you're reaching out to and what they're focused on. But it's not a huge, maybe percentage wise, but it is something that can be very helpful for these types of companies. Also looking at, if there's general underinvestment from kind of typical investors or general VCs, even climate VCs, looking at corporate VCs or customers or off takers as partners, right? And I think we're seeing a significant uptick in that, and that's where kind of having these plans and developing these projects becomes really important as well. There are other sources of finance, even even some debt equity that can be used as as working capital. Enduring Planet, for example, will loan against revenue or grant funding. There are companies that do other sources of finance like leases. So I think there are a lot of ways to kind of, if you are in an underinvested area, there are a lot of ways to kind of help catalyze what you're doing. But I would say in terms of just sheer number of dollars, like public grant funding is probably the biggest that you'll see. So starting there for these companies is going to be important.
Great, that's good to hear. If folks have questions, feel free to come off of mute or raise your hand. Otherwise, I'm just gonna keep going with questions that I have. Let's see. You talked about a lot of things to look for in companies to help them to, maybe be raising folk financing in the future. Are there any red flags that folks should be looking for along the way that might, suggest that a startup might struggle with getting folk financing down the road or getting a major grant down the road. Oh, you're on mute.
Oh, sorry. Yeah, I don't know that I'm like breaking any news here. I think a lot of these things are typical red flags to look for, but maybe I think just lack of real strategy and planning, and but maybe more specifically around, as I was mentioning, around grants. I think that in terms of being able to secure these large public funding opportunities, a lot of folks approach this ecosystem being extremely opportunistic, just kind of applying for things as they see them without maybe doing a huge comprehensive look at what the ecosystem has to offer, not assessing which the best opportunities are. You can secure funding that way, but long term, it's going to be, if you're applying for the wrong opportunities, you're going to be wasting time and money, and you're going to be missing out on the best opportunities. So having that pipeline, having that ecosystem map is really important, even if it's not, the kind of ecosystem map that we at CFS would create. Even just having a list and some sort of search that you've done is a lot better than just kind of applying for random grants that come across your desk, which frankly is how the majority of people do it, I think, in at least in early stages. I also think that to really to win and manage a major grant, and kind of win with a high success rate and manage a grant really efficiently and effectively, you really do need to have the specific expertise to do so. In many cases, people on the founding team, if they have PhDs, will have some expertise, which is great. Not always the best use of their time, but just having some sort of internal expertise, people who know what they're doing, or hiring a consultant is going to be really important. And I think I mentioned this before, but understanding the timelines of these types of capital are really important, right? So we have a lot of people that come to us that need to raise a bridge round, and they want to like get a grant to do that, and that is a fully misaligned timeline in terms of the type of capital, right? So the governments move pretty slow. Between the time you apply and the time you are awarded the grant, it's typically, depending on if it's state or federal or international, can be like 6 to 9 months, and then you have maybe 4 to 8 weeks of contracting. This is not the really big ones. It takes much longer for those. And so kind of understanding the timeline of how long things are awarded, and also how to how to really align the timelines of the grants. And another important reason to kind of have a funding pipeline, to be able to align not just a specific grant, but kind of like grant funding or non-dilutive funding overall with your overall roadmap. So just understanding both the timelines on the level of an individual funding opportunity, and the just the overall roadmap level as well.
Yeah, all makes sense. Can you walk us through a real world client that you worked with? What does that process look like for folks? How did that grant help to really, catalyze the project that they were building?
Yeah, for sure. So I think it's pretty safe to say, kind of sticking with FOAK here, like most FOAK projects that we got large grants for in the high tens or hundreds of millions would not have happened, or certainly would not have happened at the scale that they did without the grant funding that we got, without the large scale government funding that we helped secure. And that's just the reality of trying to overcome that demonstration and commercial value of death. So there are, a ton of cases where companies have been able to raise additional, secure project financing based on that. And of course, certainly a lot of cases where companies were able to raise additional venture funding, and in many cases on better terms, as well based on these fundings, and in many cases even kind of catalyze a partnership between a technology provider, which are in a lot of the companies y'all are investing in, and implementer or site host. So thinking about it as not just catalyzing funding, but catalyzing relationships as well. So there was a recent example with the EU Innovation Fund that I mentioned earlier in the presentation. This is a fund that is specifically for large-scale commercial demonstrations, or FOAK. So the project that we did was, it was a carbon capture project. The overall total project size was over 300 million euros. The grant that we requested was over 100 million. The grant will, or the program will fund 60% of the project cost, which is pretty typical for large scale grant funding. In many cases, it's like 50-50, so a 1-to-1 split. But in this case, Innovation Fund is 60%. And so then the rest of the project obviously is quite large. We're also looking at 100 million in financing. And so the rest of the project was financed between a combination of different debt instruments and project finance that were secured for this specific project. A corporate VC as well. A small amount of that was really helpful in helping secure the financing as well. And I think in terms of how we work, we really provide wraparound services in the context of funding. So we certainly do smaller projects that are in the single digit millions. But in many cases, these large, multi-tens, multi-hundred million dollar projects really need, someone to kind of quarterback not only the project, the development of the project proposal itself, but also, project design, project scoping, bringing strategic partnerships together, both ones that were kind of already in existence or new ones, developing a large consortium. Most European opportunities are consortium based. And so, our role was really to help the client. They did have the site already, but really help them put together a scope that was going to both fulfill their roadmap and what the funder was looking for. Help make create some of the relationships with the third party financing institutions and help broker those deals, bring in some other partners, and then kind of quarterback the entire thing in assembling all of the materials to be able to submit the project.
So for that, would you say were the partners primarily European in that sense, or did it bring in capital from the US? What did that look like in terms of the mix of the partnerships for that construction?
Yeah, so most of the funding was European. The CVC actually was American. It was like a very international, very international group. So the company was American, and then and most of the kind of project financing was European.
And having done so many of these deals, I'm sure there have been ones that haven't gone through. So would love to hear on the flip side, what are some things that can cause, folk financing to fail or a project to stall? Like, what does that look like?
Yeah, so I think that there are a lot of things that can kind of cause these things to stall, especially on the folk side. I think that kind of, as we've been talking about, really having an incomplete sense of what the capital stack is going to look like can be a really big killer of these projects, right? So if a startup in particular is doing a large project, it doesn't even have to be at the scale of like a $300 million or 300 million euro project, right? It can be in the tens. Just relying too heavily on equity is something that we see a lot with startups, thinking they're going to cover a huge amount of the money. It's like, okay, we'll get one grant and we'll do the rest with equity. And I think or even expecting one grant to cover everything and not really trying to apply for multiple grants or have other forms of capital as contingency, I think is one thing that really can be a killer for these these projects. And again, a lot of that goes to both planning and understanding of how the capital stack works. I think also, maybe this is a bit of a theme here, but like kind of not understanding the way that the timing works on these things. I think the both grant funding and various forms of non-dilutive funding, and in many cases like securing these debt financing facilities can take a very long time. Designing the projects, getting through the regulation and permitting, all of those things can take a really long time. And I think having expectations that things are going to go more quickly than they are, and not building contingencies in terms of timing. I've seen really good projects that kind of have all of the elements that are needed not go through because there wasn't enough time that was given with all of the planning. And I think kind of like more relevant for us, I think specifically around having internal capacity, even if it's not internal to the company but internal to the overall team, to either execute on grants or do execute on the project can be a real killer for these projects as well. And I do think that investors can play a role in this, right? Especially at at later stages where the investors are typically, I find, like fairly sophisticated themselves about these types of projects. But even earlier, I think helping your portfolio companies, not just giving them money, but helping them navigate these other institutional capital systems and helping them understand where to go for these funding, like making introductions. All of that can be incredibly helpful and like a very, very valuable role that you all can play for your portfolio companies as they kind of move through the stages toward FOAK or toward whatever projects that they are ultimately going to do.
Doing, folk projects can take a lot of understanding around project development, project finance, the capital stack, where opportunities are, who the right stakeholders are, all of those pieces that you just discussed. And that's a lot for even, startups to navigate, let alone for investors that are evaluating companies, across the different sectors, across maybe different geographies. How can investors, learn about this space when they might not be investing at those later stages?
Yeah, that's a really good question. I think that there really is like an overall dearth of good information about this, and I think a lot of the information around how to do this in climate or just in general is kind of like held in the heads of either in the institutional knowledge of certain organizations or in the heads of certain people who have done it a lot. I have before I started working on projects of this size, I learned a ton just from literally listening to, it sounds a little crazy. I learned a ton about just listening to podcasts where people would go into like really dive deep into case studies or really dive deep into like, oh, this is how I put this capital stack together, or this is how to think about this blended capital stack. So kind of like up leveling your base of knowledge for just through listening to the people who have already done it is absolutely critical. There are organizations now, if you're kind of talking about folks specifically, there are organizations now that there are more organizations kind of supporting this work, Precursor, Mark One, Node, and others. And they're starting to put out some really good information, like more general information. Like I know Mark One just held like a round table and put out like an explainer about it. So they're starting to put out some really good information. So I would say just learn from the people who've done it before in
Yeah.
whatever whatever that looks like, right? Whether that is free informational resources, of which there are now more, or hiring an expert if you're actually getting to that point. And frankly, in a lot of us, like I know myself, like I am happy to kind of just have conversations with people. We do a lot of advising of investors and other folks in the ecosystem, whether that's paid or not. I just think it's really important.
Well, do you have any of those podcast recommendations as well? Do you can recall?
I mean, usually they're not, frankly, they're not like a folk podcast per se. It's like it's about the people, right? It's about the people who've done it before. So they're kind of across, the main climate podcasts that you would think of. We can follow up with that too.
Yeah, that sounds good. We can send it out after follow up. Um, if no one else has questions, yeah, I just wanted to wrap up with Joel and just have you, just say anything else that's really helpful to know in the space right now, 2025, given a lot of the government financing, at least at the federal level, the US is really slowing and pausing right now. How can folks really be thinking about the space for the next, maybe 6 to 12 months and how can they think about it when it comes to making decisions of where to invest?
Yeah. Well, I mean, I think that like assessing assessing grantability is something that I think investors do to an increasing degree now, and I think there's probably a sense that maybe it's not as important now to assess a company's grantability because of what's going on at the federal level, and I would say that's not the case. There's still a lot of grants out there, whether there are grants at the federal level, so it may even be more important to assess grantability because a company that is going to have access to federal grant funding is going to be a much better investment than a company that's not going to have access to federal grant dollars, and that's going to be a big point of differentiation for folks. So I would say assessing for grantability is still a really going to be really important, right? And so that is both understanding, do the companies themselves understand what the funding ecosystem looks like? Do they have a plan for securing it? Do they have, again, partners? Do they have understandings of who they can go for support if they don't have that themselves? And there is going to be, or there still is funding at all of these different levels. It's just the U.S. federal government has really kind of restricted the number of sectors that it's looking at right now. The other thing is considering where the policy environment is and where the funding environment is. I don't know how many of you go in, work internationally or make international investments, but there are a lot of US companies that are looking to do more work in Canada and do more work in Europe, and that's something that we have seen companies do that in a very promising way already and are continuing to do that. So that may be something that's a differentiator for a company, and maybe something that if you don't invest internationally, maybe something to look at, although I don't want to rewrite all of your investment theses for you. Yeah, I guess my headline just would be, I'm trying to be realistic and not sound too Pollyannish about this, but there's still grant funding out there. There's still a whole capital stack out there, and companies and investors that understand that are going to be the ones that win.
Great. Well, that's good to end on a somewhat optimistic note. So thanks for that. Yeah, so I'd love to wrap up. Thanks again, Joel, for joining us today and for sharing, what you're seeing, what you're hearing, what you're working on the ground in real time. Because I know it's been such a, back and forth kind of climate in the US this year. So really helpful to hear what's actually happening.
Oh, and just quickly, I should also mention, one of the things that we do that is kind of in service of the ecosystem is doing webinars like this for portfolio companies. So if, an expanded, it may not be focused on FOAK, it may just be focused on grants in general or what's happening in the funding environment. But we do pro bono webinars for investors for their portfolio companies, and in some cases we also do free one-on-one strategy sessions for portfolio companies. So if that is of interest to folks, then you should feel free to reach out.
Thanks, Joel. That's really helpful. Yeah, this was all for the community, and so we just want to get as much information out there as possible and get more funding in the space, more support for startups in climate. Anything else coming up for climate finance solutions?
I think that's it. We talked about all of it.
Well, thanks so much, Joel. Thanks for joining us today. Thank you, everyone, for joining us as well. And we'll see you at the next one.
Thank you.
Bye.